esperar que suba la marea. All right, welcome everybody. How are you guys? Quick mic check. Lucian, I see you here. Glad to have you. I don't know if I'm frozen. What's going on here? Are we good? Yeah, I think we are. Nice, nice. Okay, let's get started, guys. Welcome, everybody. My name is Saul. Glad to be with you. Before we get started, please remember we're going to be trading and analyzing and working with live market conditions. So anything I see, I say or do here is not meant to be a signal, buy or sell signal. I just want to explain you the way I read the markets and I read the charts and I analyze and I execute and trade and manage and everything, but with an educational purpose. So do not follow along. We will be facing losses and wins and everything. So just be responsible for your own trading, please. Okay. With that being said, let me show you. Hello everyone. Hi Bob, Anna, Grim, Insta, Lucian. Glad to have you. Let me share my screen here for a moment. I'm in a in a trade right now that I want to walk you through. It's a trade it's a setup I mentioned 2 weeks ago, and it's now on and it's on and running. So I want to show you the analysis behind it, and then how I build the position and what I'm waiting for now to happen, and then we might go to other time frames to see if there's another setup or something like that. But let me just start. So we're analyzing the UK 100 index, and the setup was, let me hide this for a second. Okay, so I was looking at this chart 2 weeks ago already. Okay, this is the 4-hour chart, and what I want to make clear, everyone understand, is the difference between an impulse and a channel, an impulse and a compression. Okay, so I was just seeing the difference between this impulse here. Okay, this impulse left supply area right there, and then last days or weeks it started approaching that supply area, but in a channel. Okay, I hope you can see this channel right here. Okay, this channel, the way it's formed, it's a compressional channel. Okay, if we go and zoom in a little bit to that channel, we will see the price checks all supply and all demand. Okay, so for example, goes a little bit goes up a little bit, creates a little demand, but then it goes back and tests that demand. So it goes up and down and tests and consumes all demand and all supply, and that channel is telling us there's a balance between buyers and sellers. Of course, we see a little bit more buying pressure. That's why the channel is going up. But when those channels meet a key level, okay, a supply or a demand area, those tend to break aggressively to either side. Okay, so in this case, that channel is approaching what we marked before as a supply area back here. So I'm expecting now at that point that sellers will be active, and they will be willing to sell one more time from those areas. But now there will be no demand along all the channel to stop a movement to be aggressively down in this case, okay, all the way to this area down here. So when I saw the market going up, I remember doing this exercise last week. Okay, I went, I believe, to the 1 hour chart. Can't remember exactly the okay, and I marked the what's the bottom part of the supply area and the decision point in the supply area, and I started building into a sell position, okay, with buy order levels. So if I bring my trades back, you will see exactly where. Okay, here they are. So first I went, I shorted, I think at these levels, okay, which are that one and that one, okay. So actually I had a previous sell that I just closed before the session for a break even. I will show you right now, okay, around this area, okay. So I started shorting with just one position. Then the market went against me, okay, further into the supply area, and I added 2 positions, okay, which is 1 and 2. And then the market went up, okay, to the top of the supply area, and I added an extra position, okay, you can see larger position. And when the market came in my favor, then I added this bottom one right here, which is that one, and I peel off the initial, okay, the first trade, which you can see here in the history right now, okay, that one, for a little profit, but because of swaps and commission, it ended up in a break-even trade, okay, just a $30 losing trade. But that gave me the opportunity, okay, this building into a trade gave me the opportunity to be best positioned, okay, at best available price up here with the largest trades, okay, with my half a lot and then 2 middle lot trades, okay. And then I reallocated some of the, because I wanted to be more into the trade, then I added this trade so I can compensate also this break-even trade. So at this point, if I, for example, close this trade right here, okay, now I'm break-even, okay, on the position. So now I have my best positions at my best entry price and max allocated or best allocated, that I need to let them run. Now the setup has not triggered yet, okay. My setup will trigger once I break that support level, okay. That on the hourly cost and created a demand area, which we visited already here and reacted to that. So my setup will not trigger until we break that that support level. Now we tested the demand one time, so I expect a break of that low, and if that happens, you see there's no key demands or key supports along the channel to prevent these trades to go all the way to the lows, okay. I'm not quite sure where is this going to end, but probably around that area. That's why I have one target around that area, probably around that area right there, and probably around that area. So I don't know where's that going to happen. I will be watching, okay. This is a multi-days and probably multi-weeks setup, so I don't know how this is going to develop, but new bars will give me new information, okay. So same analysis I do on the 1 minute charts, I also do on my 4-hour charts and daily charts and all the charts. So I will see how this develops, and in the meantime, there's not much to do with this trade. I just need to wait for the breakout to happen, and we should see an aggressive movement to the upside, to the downside, which we saw already on the Nasdaq, okay. We saw this, this nice movement down, and also on the S&P we had 2 daily bars to the downside, okay. And we haven't seen that yet on the FTSE. So probably today would be the first bearish day, and I expect another day bearish movement. In case that happens, then I'll be in a good setup. If that fails, then I'll take small shorts or small losses. Okay, but at this point, I know I don't want to be holding these. If this turns into a losing trade, I know where all my stops need to be placed, and I might break even or scale out of the trade or whatever it's going to be. It's early to say. I just need to wait at this point, and this might be a nice trade. Okay. Each one of these positions has the potential to provide me around $300 or $400. So this might be a $1,000 trade in case it really goes in my favor. If it goes against me, that this will lose around $200 or $300. Okay, so that's a very long setup. So now let's go to another pairs and look for short-term opportunities to show you, maybe full setups on smaller time frames. Okay, but just so you know that same things I show you on the small time frames, I apply them to larger time frames. Okay, so I identify key areas, key supply, key demands. I wait for compressions towards those key levels, and I try to take advantage of those. Okay, of course, on larger time frames, they don't happen that oftenly, so that's why I opt to go to lower time frames. So now let's discuss also another interesting topic, which is the break of the parity level on the Euro USD. We've been discussing this for weeks already, and now we've discussed the implications of what's going on actually. Okay, and how a strong dollar like right now is not good, not for the US economy and not for the worldwide economy, for several reasons, the debt and everything. But here we are. Okay, we have the Fed saying they will keep increasing interest rates, so we have more money flying into the US dollar, and we see the dollar keep strengthening against the currencies and against the euro. Situation in euro is also problematic, so we see the euro being weaker than pound and Aussie and other major currencies. So we see how the euro is especially weak against the dollar. So for the first time yesterday, we broke and held, okay, and closed below parity level. So this is something we didn't experience last time. Okay, last time we tried to break the parity level, we had buyers coming into the market and rejecting that breakout, and then we had the movement to the upside. This time we broke through and closed. So that's a whole new scenario. And I just want to show you these daily candles on the hourly candlestick so we can understand how the breakout was formed. Okay, so if we come to the hourlies, we identify this. Okay, we have this consolidation, then first break of this supply area. Okay, look at this movement, and then from that area we kind of compressed. Okay, we approach slowly the parity level. Okay, so we have this channel towards the parity level, and the same way we saw on this setup. Okay, the channel towards the key level. So we had the channel towards the parity level, and look at what happened there. Okay, right there, instead of having buyers coming into the market and pushing this up and having no supply in order to stop that break up, at that very level, sellers actually came into the market and pushed the market lower. Okay, so you can see at the breaking area, we formed a new supply area. Okay, you can see the movement right there. You can see the break and the continuation, and now we're just moving sideways. Okay, indecision in the market if we're going to continue lower or we're going to retrace, but this has become now a supply area, a fresh supply area, and we can wait for a retest and continuation of that supply area. Okay, that's a very common pattern that I look for on the 5-minute charts and 1-minute chart. A break and retest and continuation. So we're still waiting. Okay, we haven't had that that setup right here, but we can expect that to happen. Okay, you can see at the parity level, the red line, the supply right there. Okay, see the supply area. So that will be a significant level. So now that's my bias. Now if I want to go to lower time frames, I know my bias. I know my bias is short, and I will be looking for short opportunities as long as we stay below the parity level and the supply area, which is around there. So it's around 80 or 90 pips that I want to be shorting. Of course, if I go to lower time frames, then I can decide that I'll be a seller as long as we stay below that resistance. If that breaks to the upside, I will hold and see how price approaches. Okay, the supply area, which is marked here, and then I'll decide to go short again. Okay, but as long as we, I'm comfortable, trading with the bias, so we can. Let me just check. So if I'm going to be shorting, I will be risking about 20 pips, okay, and then I will be looking for some continuation to the downside. Then I go to the 1 minute chart, and I do the same exercise. I look for the resistance and the resistance up here, and I'll wait for price to go to those levels, and I will start shorting, okay, because I have my bias already established. Yeah, Lucian, already 13 days in the trade. Yeah, those are long-term setups. Okay. Lucian, no. Anna, did you pass your first level or something? If that, congratulations. And yeah, Lucian, so I just related to what you mentioned, the supply area. Of course, new events and new fundamental movements might be formed right now. Okay, there might be some politics and monetary announcements and stuff like that might create a new demand, very important fundamental demand here, that will break again the parity level to the upside. And this, if that's the case, the parity level would become then a swap level, okay, a supply area that turns into a demand area, if that's the case. So just be, as I always say, we need to see how price approaches that supply area, and then we see if it breaks it or respects it. Okay. So let's go to the 1 minute chart and let's start looking for trading opportunities. Just wanna see the price action a little bit. I wanna see how price forms and identify my potential entry levels. I just want to go a little bit with the market to see, since I'm in a ranging day, okay, you can see we're moving sideways. So I will be looking for little scalps more than trying to hold trades, and expecting a break to the downside or a break of the full range. I might leave one running, but I expect more choppy movement. I haven't checked if we have news or something today. Let me just do that quickly. But I think a 1 minute, 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 1 minute Okay, so we have news in about 30 minutes. But I think an approach of just taking quick scalps would be more applied to the market character of the market. So I see the price action, you can see the indecision, you can see the tails on both sides. There's a little support area there, so targets there should be easily hit. Targets below that will require a little bit more effort, so I'll try to have my targets above those levels. How I manage a 13-day position in an index. We're not supposed to keep it over. Yeah, but yeah, that's a rule on evaluation accounts. So I guess I am suffering from swap, high swaps, and you can see the high swaps, which is making this less profitable. But this is not an evaluation account, and also I guess I'm just aware of the of the risk of having this open over the weekend, and a close contact to the risk manager over here. But yeah, the recommendation is not to hold over the weekend indices. So now that range, this little consolidation here is 2 pips. So if I manage to get a trade at the very top and close it at the very bottom, that would be a 2 pip target trade. So let's see if I can do that. That was low. Just need to be careful with the break. Okay, that's the break. Let's wait. Okay. Now we need to adjust. Now that's the next resistance area. Now let's wait a little bit. We'll see how we approach the very bottom of the range. Okay, I need momentum to slow down there. That's an aggressive movement, more than expected. Let's see if sellers come into the market. Now I need to fix a little bit. Okay, you see, this is not the way I was, mapping the trade. That's a 3 times the average true range. Okay, that's a 10 pip 1 minute bar, when the average tends to be 3 pip. So that's way larger than expected. So now I need to do a little bit of fixing on this trade. So let's start with that. Grim, you're long, so you're good. Yeah, because we might see a break of the range and a retest of the supply area right there. Okay, if we do see the break, there's not much here. I mean, there's some mid-range supply there to stop the break, but yeah, I am in the I need to do some fixing right now. So let's get into it. Retail sentiment is long also. So I'm in 4 positions. So now I need to do some fixing for those 4 positions. So I need to get a new reason to get in, okay, to go short, because if this just breaks up, that's it. I need to take the loss. Okay, there's nothing I can do with that. Yeah, that's overextended for sure. Okay, now this created a key support on the 1 minute chart. Okay, so now all my targets need to be above that. Okay, because we might see the retest of that demand and then continuation higher. So I want to make sure in my fixing process, my targets are above that. Okay, so kind of an attempt of going lower, but you can see the end of the candle. We had the tail form, so we have all the bulls pushing this higher. So let's see if we can from there get a little bit of fixing. I mean, my worst position are losing 10 pips. So if these ones come into 5 pips of profit, I will be fixing those ones. So let's see if that happens. Okay, a break of those lows would be great for my trade. Great. We need some. I need some continuation here. We're at that point. I need some follow through right now. Nice. Follow through. Okay, what I'm doing now is just reducing exposure in the market. Okay, so I close one of my top one of my middle ones, and at least I will reduce my exposure, and then I will be able to reallocate that into the market. Okay, that's one. That's the break even. I just don't want to hold it longer, and I'll take that one and that one, and I'm left with one. Okay, so that was a great fixing, because now we might meet the demand and move higher. So I don't want to be there, but just okay, look at what we did. Okay, we where's the euro ones? Okay, so we took -5 +5, -8 -2, so that's -10, and plus 10. So that's kind of break even. Of course, minus commission, that's a losing trade. But from a very bad position I had at first, I'm in a very manageable position right now. Okay, if I take this loss, let me just go long a little bit. Sorry, I'm just switching my position because I expect a little bit of movement now to the upside, and then I might short again. So but imperative for doing this kind of trading, imperative to start small. Okay, if I have gone short here with my max position, I wouldn't have, you know, position or allocation lot size left in order to do my fixing in this case. Okay, so that's super important. Start small, start light, and then if it goes in your favor, you can add. If it goes against you, you can add to either make money or fix. Okay, in this case I needed to fix because that was an unexpected movement right there. Okay, that one, so I needed to do some fixing. Now I'm switching into the slowly into the bullish side, kind of hedge it, and I need to give market some time to tell me where it's heading. Okay. So now my new setup is to be long as we stay above this new demand area. I'm just a little bit concerned about the news in 15 minutes. That might bring, you know, volatility and negate all my, you know, technical analysis. So I just need to be aware of that. So the setup for this trade, for what I went long, is, you know, the pullback and then an attempt to retest the highs, which is struggling to get there. But if it goes up, I will take this profit, little profit. I know it's, you know, little, but I'll take some losses of the remaining position. And then if it keeps going that way in this pressing market up towards the highs, I will short again. Okay, so now it's important to see if this gains momentum, and then I can hold the trade for longer, or if it keeps just going up and down, 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 and presses towards the highs. Okay, that's what I'm looking for now. Take a little bit more profit here, and I'll do a technique which is scaling out of this trade. So I don't have the whole position running against me. Okay. So I took the $7 gain, and I took $6 loss. Okay, now I have a very manageable position right now. I'm not very concerned. I can now comfortably take the loss if I need to. Okay, so if my setup fails, which looks like, I'm not concerned about taking the small loss. And then if I do see a break, fundamental break to the upside, then I'll wait for pullbacks to rejoin the bullish side of this trade. Okay, so I'm giving you all, guys. I'm giving you the setup, the management, the taking losses, the adjustments, the fixing. So raw trading. Yeah, so this looks very, very bullish. And it looks like I will end up taking the loss on the setup and looking for ways to if this actually breaks, I'll look for ways to join the bullish movement. Guys, if this is confusing, just keep coming, okay? I know. Watch our webinars and see. We have plenty of webinars on supply, demand, risk allocation, and then this is just live execution. Okay. You see that that movement. Okay? I'm glad I had my stop loss there. That's a fundamental break to the upside. Now I really want to wait for pullbacks to rejoin the bullish movement. Okay, the bullish side. So, but I tried to diminish my loss as much as I could. Okay, and then I went to a point when I was comfortable with the loss I was taking. So now I want to see how prices approaches. Remember that area right there? That's a supply area, untested. So I want to my bias is still bearish, but I'm aware of what's going on right now. Okay, so we're breaking. The break was fundamental. You saw live how that gain momentum is just pushing to the upside. So now I will, in between where we are now and the supply area, if I have the opportunity to buy, I will try to buy. And then depending on how we approach the supply area, I might consider selling. Okay. I need to wait for the pullback. I can start with a small trade, but it's not the best entry. Okay, I want to wait for a pullback and then I feel more comfortable going in. Okay, because we are going to react now to the supply, to the mid-range supply, which is all this area right there. So along that area, I need to expect sellers to be active. See how buyers are just taking over the market. So we had the reaction here, but not in a pullback. So okay, let's see if I took a little profit. Then if I have a deeper pullback, I will add again. Okay. remove stop loss on break even. Yeah, that's good. Just I have a video explaining when to and where to move the stop loss, which is a very tricky thing to do because we want to be, you know, risk free, and we do not allow market to fluctuate enough. Okay, so just make sure you don't bring your stop loss too soon to a break-even point, because market needs to fluctuate and retest those areas before continuing in your favor. So just be aware of that. Lucian, my trading has improved massively since last year, but the complexity of your approach is amazing, above the level I'm at now. But Lucian, let me tell you, I've been trading, I don't know, 12 years now or 11 years now. I realized today how much I know, but I wasn't aware of how much I was missing, 4 and 3 years ago. So just keep coming to the market, and you will start, you will start just understanding more and more and more about key levels and structures and movement and price action. And there's different skills we need to master in the analysis area and in the trading area and management area and psychological area. Really, trading it's very, very complex, so it takes time. So just hanging there and keep practicing, keep coming, and you'll get there. Okay, so remember we are at the supply area, and we see the indecision. Okay, mid-range supply. We should get the the pullback to retest the initial demand area and then continue higher. So I could actually it's kind of risky. Let's see if we can get it. Okay, if we get the pullback right now, if I don't get the pullback, we're way closer to the closer to the demand area, or to the supply area. So not the best setup, but let's see if we can get a little bounce, a little retracement. This is way overextended. We should get some selling activity before getting all the way to the top supply area. So let's see if we can get it. See the tails at the top. Okay, the sellers out there. Let's see if they can push a little bit the market down. If not, I might just take the loss there. Okay, let me see how that forms. If not, we will have a continuation break, a continuation movement. Okay, so we had the initial movement, we're resting now, and we'll continue. So that's a rally pattern. Let's see if that forms, so we have the retracement. The fact that the sellers have been trying to push it down one time, another time, and they've been failing, open up the door for the buyers to actually go and push the market higher. So I also need to be aware of that. And sometimes it's just better to, acknowledge that, kill that trade, and leave another trade. Okay. But when I enter my positions that small, I give myself flexibility to play around with my positions. We've got the news in 2 minutes, so I think we'll watch that. Not happy that I have an open trade while the news comes. Well, let's see how that. So we need to be careful of spreads widening when that happens. I think I'll limit my risk to the top part of the mid-range supply, because if that breaks, it will continue all the way up. So there's no sense on holding that. I just want to watch the news with you. We'll see if, where that puts us. So we've got 30 seconds. For the rally base drop pattern to trigger, we need to break that low there. So I need to see a break of that. Whoa. That's the news. And that should go to the supply area. And around news is tricky to trade because patterns just break down. Okay, so not a huge fan, but it's nice to see how we're approaching. Okay, and what's going to happen around parity level, and we'll hang a few more minutes to see if something interesting happens there, and if not, we will wrap up. Let's see. So the only reason I would short right now is the way that we are overextended on the 5-minute chart and the 1-minute chart and all the little charts. So we're overextended, approaching the supply area. So that's a good, setup for a little scalp. Other than that, looks like we are approaching quite powerful to the supply area. So I wouldn't rely on that to holding. Okay, it's important to see the difference between what we saw, the impulse or the channel. Okay, the impulse or the pressing channel. So pressing channel, you want to be all over the trade. When price approach your key area on an impulse way, you want to be more conservative. If we break this parity level, if we break that area, that would create an interesting pattern on the dailies. I believe there might be some divergence here. Let me confirm that. Okay, so look at that. So we've got the lower low. But we've got a higher low on the MACD. So this break was with less momentum behind. Okay, so that's a nice divergence pattern. So if we break our supply area, that becomes a fresh demand. Okay, all this you can see on the hourlies, this has become now a demand area. If it managed to break the supply area back here, the parity level, and closes above, that's a reversal pattern on the whole large macro structure of the dailies. If the divergence actually happens, you know, if the and the fundamentals are still there. Okay, we discussed the amount of efforts there will be to keep euro above parity level. Same for pound, same for everything, I guess. Yeah, RSI, MACD, they will show the same. They should be showing the same. If New Zealand franc, it's not a pair I follow, but let's see if we can see something interesting. It's not displaying correctly. It's loading the data. There we go. Yeah, so this is not a pair I personally follow, but just from, you know, what I see here, we are at key, you know, key historical levels from 2 years ago. Okay, these ones back here, we're trading there. So long term, those will be hard to break, and we are also forming some supply areas. So I would go to lower time frames to see how that breakout was formed, but just from the dailies, I do see there's a lot of selling pressure. I see this movement down and this movement down, so there's a lot of selling pressure. But last, you know, weeks and months, we've been just moving sideways. So a very balanced pair, and you can see that all over the movement, how it goes. You know, the franc and the Kiwi are very, very balanced in strength. So I don't know what you know, what's your approach or what you're looking to do with this. If I was building a position, and I would wait. I'm in the middle of the range, so I would start shorting these areas, or wait for, you know, the price come lower to start buying a little bit. But I don't know. It's hard to explain what I would do. It's not a pair I follow. Okay, guys. I think we'll wrap up. Certainly fascinating times, you know, to be in the markets. Lots of opportunity, lots of volatility. We start to see the reaction here on the 1 minute chart, but still I see the momentum just buying. So I'll try to take advantage of these pullbacks to start building little long position to a retest of the supply area. But yeah, I'll tell you how that goes next week. So thanks for coming, thanks for staying, and till next time. Yeah, nice session, interesting. Thank you guys. Bye bye.